G'day folks, welcome back to another episode of Euro Mining News with your host John Franco. Today we'll be talking gold in Finland. So we're back in Finland. We got 3 TSX or Canadian listed companies that we're going to be chatting about. Basically they're doing a bit of wheeling and dealing, a bit of buying and selling of assets and or JV assets. So what's happened is B2 Gold, which is a hefty $4.6 billion market capped Canadian listed gold producer, they have agreed to a preliminary bid to sell their 70% stake in with its JV with Aurion in Finland. The buyer is Rupurt Resources, also Canadian listed, $700 million market cap for those boys, and they've got a couple of reasons why they would want that. So, and I'll get onto those in a moment. But basically, Aurion Resources, they own 30%. B2 owns the other 70% who want to get rid of that. This JV sits on a major crustal scale shear zone called the Sirkka Shear in the central Lapland belt in Finland. There's been a bunch of recent high-grade hits that B2 and Aurion have managed to get out of it recently. Had the Helmi prospect discovered, which was 77 metres at 2 grams per tonne. And they've got the Kutu Vorona prospect that hosts 11 metres at a stonking 6.5 grams per tonne. So we're talking some serious grade here. Now, why would B2 be enticed to sell when they've got some good grade there? Well, it's more so that Rupert definitely want to buy. The reason why is Rupert's flagship Ikari project, where they've already got 4 million ounces at over 2 grams per tonne in the indicated category, sits literally just next door. So if I pull up this right here, there's their Ikari with the 4 million ounces, and right here, 8 Ks to the west, or even less in some circumstances, like it's sitting right on the border, is this JV between Rupert and Aurion. So it makes sense that Rupert wants to get their hands on this thing. Even more so, the fact that they own this Patavara mill, 0.5 million tonne per annum processing capacity, and it's within easy trucking distance from Ikari to that mill there. So they've got some good feed if this deal does go through. Now, synergies obviously make sense. The way this deal is going to go down, if it does go down, is Rupert will issue 28.6 million Rupert Resources shares for approximately 102.8 million Canadian, which will go to B2 Gold. The prices have been basically based off of the share price as of the 8th of March. Now, even though B2 have said yes to this transaction, it is still conditional based on a few investor rights agreements, completion of mutual due diligence, and applicable regulatory approvals. Now, Aurion does technically hold the right to first refusal, as it's been written when the JV was made in the 2019 shareholders agreement. So this right, basically, it allows Aurion the right to acquire B2's 70% interest in the JV with the same terms or no worse than what the buyer, which in this case is Rupert, has offered. So they can basically take it for just over 100 mil Canadian if they want to. Now, Aurion has until May the 9th to decide whether it's going to exercise that right to block Rupurt and try to get hold of the rest of that project. However, Aurion is well funded, but it's a junior. All right, it hasn't got enough to take on the other 70% stake, really, in my opinion. But obviously, it depends which way they want to run this. So basically, they've got a market cap of 77 million as of today. So purchasing an asset worth over 100 million is going to be either diluting shareholders massively when they go to shake the tin in a capital raise, or alternatively they've got to find someone to debt fund this project, which is not going to be cheap, especially when these guys didn't have any revenue last year. And not only did they just not have any revenue, they also burnt through 9.7 mil of cash in drilling. So how much cash does Aurion have on hand? Not that much. Basically, when Aurion last reported its September 2023 balance sheet, which was they reported in November, it stated that it had zero debt and its cash on hand was 11 mil. So a bit shy of that hundy. So there's a fair way to go, especially when you take into account that they are spending a fair bit on exploration year on year at the moment. Now, capital raise is basically, just to let people know out there that don't know what it is, I'm sure most of you do, but it's basically where a publicly traded company can sell shares to investors to raise cash and to fund further growth. However, the downside to a capital raise is that it dilutes the share value for the existing shareholders. So essentially reducing the value per share each time you do a capital raise. Now, would existing shareholders be willing to dilute their holdings through a large capital raise? Yeah, in many situations shareholders do. When they see a great opportunity on the horizon. However, in this case, the dilution would be a bit too severe, I think, compared to the potential return, especially considering that the company did not record any revenue over the last year. So further capital raises would likely be required before they can shift from that explorer into a developer. And then they don't have a mill either. So I see it unlikely, but unlikely things happen in this industry all the time. Now, that's basically it for today. So thanks again for listening to episode number 2. If you've got any feedback, let us know. Otherwise, thanks for tuning in to Euro Mining News with John Franco. See you, mate.